Hello there, everyone. This is Bruce at Fleet Capital Management. It's Friday afternoon, the 27th day of June, 2025. We're going to take a look at the markets. A lot has changed, so let's just jump right in. We always start by saying the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I am always available for you, Bruce at Fleet Capital Management. So, like I said, I'm seeing a lot of changes in the technical picture, and we're going to spend most of our time on the charts today because the single most important thing to know is whether the market's going up or down. Everything follows from there. So, before the charts, we always go to our matrix. The matrix as of today is green, straight across. The daily, everything's always based on the S&P, but we have daily indicators, which are fairly short term. We have weekly indicators on the S&P 500, which are more substantial and more important to me than the daily. We have our moving average stack, the 3-day moving average, which is simply just my trading moving average, is above the 20, and the 20 is above the 50, and we are clearly above the 200 now. A very important indicator that I've created and we use is the weekly 10-week is over the weekly 20-week EMA, stands for exponential moving average. This is our bear market avoidance indicator. And again, I want to be clear. When this turns red, it doesn't mean we're in a bear market. It means we are now prepared to avoid a bear market, and it has saved our bacon a number of times. The VIX, which is the fear index, has been bouncing around like crazy, which is to be expected because the markets and business really don't know from one day to another which tariffs are on, which tariffs are off, how do we do business, and it's been pretty crazy. But it has fallen back into the green for the first time in a long time, except for a couple of little dips. But it's been a long time since it's been consistently in the green. Hopefully, it will stay. If something out of the blue happens economically, geopolitically, this can always bounce back up. The caution areas between 17 and 20. The red is means there's a lot of fear in the markets, and this was due to the United States striking Iran. This one was due to Iran striking or Israel striking Iran. So lots of changes, but I wouldn't be surprised if this pops back up. But we're going to ride it for as long as we can because that's what we do. We follow the charts. Okay. Here's the S&P 500. The daily chart's on the left. The weekly chart is on the right. I have circled an area on both of them because this is important. And this is why I've started to get a little bit more aggressive. This is a breakout now. We broke out above the area of resistance on the daily chart. We have broken out just barely over a weekly area of resistance, which has been very difficult. And I've pointed out, look how many weeks this thing has just sort of hit. It didn't even go halfway into that level of resistance. And now we're at the very, very, very top of it. So that looks breakout to me. Also, because our momentum is looking good, our RSI is looking good. This is what I would call a power indicator. When the green is above that dotted line, what that represents is that there's enough buying pressure to move the price, to move prices higher. The OBV is struggling, but still trying to change into the green. And we've got our pure momentum indicator down here. So a lot of changes, all of them good. If I look at the Qs, which is the NASDAQ 100 on the daily and the weekly chart, it's really the same picture. We have that breakout over resistance. We have this weekly breakout. So I won't bore you. Everything looks about the same. Remember. We've had a really strong week. Markets don't go straight up. Markets go up, they go sideways, they go up, they go sideways. So you've got to keep that in mind. We never want greed or FOMO to take over because they will always go into either a sideways motion, which is more of a consolidation channel, and many times they dip, especially since we just broke this area of resistance on both the daily and the weekly. It is very common in technical analysis for price to come back down to that level, test it, and then bounce. So I haven't gone all in yet, but if that happens over the next week or two, which quite frankly I expect, if that happens, we will use that dip as another buying opportunity. We try not to buy at the top when things are running because after 40 years of staring at these charts, I know how common it is for it to come back down, do a test. If it tests, and then the next day bounces even just a little bit, then we have clear sailing and we're going to go all in. I want to go over a number of our positions. Most of you probably own most of these positions. Some of you may not own all of them, but we've had some changes, so I want to go over this. CLS. CLS just keeps running. It's running and running and running, and it's been fantastic to us. But please note that on the weekly chart for CLS, yes, good news. It broke this level of resistance. That's excellent. But if you see this linear regression with the blue and the red, what have I always told you? When we get way ahead of or break through the linear regression, it's pretty common that it comes back down towards the mean. The last time it happened, we always remember this saying also, look left to learn. You're looking at history. The last time that happened, we had a pretty precipitous fall. And that's what caused me to really go all in on this stock. Um, I wouldn't be surprised, but here's another thought. That may not happen this time because we broke through this level of resistance. See, last time, and this was in early February, we didn't. See, the top of that candle is right there at the midline of this resistance area, and we were on top of the linear regression. You put both of those together, this could have been expected. This time, based on linear regression rules, it should come back down. But when I couple that with this break of resistance, it may go back up. But here's what I have decided to do. We've got an outstanding profit in this stock. I have an alert stop right here. It's pretty darn close. On the daily, you can see there was a tiny little gap. I've got an alert stop right here. If this thing starts to roll over and head towards that alert, I'm going to sell this position. I want to keep the profit that we have. We're also, if you look at this RSI, it looks like we're a little bit on the overextended. Also on this RSI, overextended. I don't want to give that back. So I've got a very, very tight alert stop. I'm going to pay very close attention to this stock next week. And if it does start to roll at all, I'm going to sell the position. We can always go back into it at another time. So that's CLS. I just recently added MELI, Macro Libre. I've owned this before. I'm a little nervous about this because we're still under this area of resistance, but momentum has started to turn back up. The RSI crossed that 55 line. I just had a number of things on this chart. This company is kind of the Latin American version of Amazon, and they're doing very, very well. We have a profit, not a big profit yet, but I'm going to give this stock some time, but that's why I bought it. PEGA, another stock, it is now above our entry point. Things are looking good. We broke through this level of resistance, but we've got another one right here. So this one's going to be tricky. I'm just going to tell you, this is going to be a tricky stock, and that's going to have very, very close eye on that. And then just a couple others. I won't go through all of them. Gold has recently started to fall off, and it had a pretty big fall. It broke through that 50-day moving average. See how it held onto that average last time? See how it held that 50-day average last time? Now it's broken. That's a problem. That is a real warning sign. But let me show you a couple of things. the price opened way down and then it pushed back up today on higher than average volume. I don't know. That could be a positive. Um, we're in an area of what used to be resistance and it's now support. Maybe that turns it around. I'm just not sure. But instead of doing an alert stop, I am putting a live stop in to the market. And I may even move this higher. I'm not sure yet. But I am putting a live stop in. And even if we get stopped out here, there's a few percent lower than it is, we'll still have a nice gain. And again, never fear. We can always go back in if we want, especially when we have a gain. There's no tax burden or tax rules. So, but it is rolling over. I'm seeing a lot of warning signs, and I may take us out of gold. With silver, kind of the same thing. We're seeing a little bit of a rollover, but this is different. All of the analysis that I read on silver is that silver is becoming a somewhat scarce commodity. It's not a scarce commodity, but it's moving in that direction. And silver is used in manufacturing in just a multitude of ways. I don't have a live stop here. I've got an alert stop. I want to give silver a fair amount of room. I'm not ready to give up on silver. I think the longer term trajectory of silver is still quite bullish. So I'm giving that some time. IBIT, which is Bitcoin. Do you see this sideways? Just don't look at the ups and downs, but kind of you can see the sideways action, which has been in for quite some time. Um, I don't, I'm not terribly worried about that. You can see it on the weekly chart. We had this big push from when we went in. We went in right down here. We had kind of perfect timing for this time. This is like the fifth time or sixth time we've been in IBIT. And it ran up into this area of resistance, and it's been going sideways ever since. If you see these little tiny dash lines, that is an area of consolidation. Um, I'm a believer. I was a latecomer to Bitcoin. I think Bitcoin um, is going dramatically higher. Will it go down first? I don't know. We have a decent gain. We have a nice gain. We went into it all the way down here. Like I said, we had our last entry was just absolutely picture perfect. And I've got an alert stop here, just under the 50-day moving average. I'm not going to give away all of that gain that we had, but I am going to give it some room to see if maybe it breaks out of this consolidation and moves higher. And this is primarily for the folks who own the ETF IBIT, IBIT. For those of you, and it's most, who own the protected Bitcoin ETFs that I had purchased. Those are staying. We've got protection. I'm not worried about those. But IBIT can go sideways for quite some time. You see back here, IBIT went sideways a fairly long consolidation zone. It went sideways a long consolidation zone. It did fall down. Then it shot back up, and we're in one of those now. So I plan on giving IBIT as much room as I can, but not forever. I won't give away all of our profits. That's just not going to happen. So, bottom line of this little optimistic talk, it's probably the most optimistic talk you've heard me give in a long time. Things look good. I follow the charts, and that's what I do. That's what I believe in. And they haven't led me astray yet. I'm going to see how this works. And like I said, if we have a little test and then a bounce, we're going to go in even more. We're going to be buying more and more individual stocks. I just added SMH, semiconductor. I bought it right here. See that? Right there is where I bought it. And we almost immediately had a run just because I saw some things on the chart that were extremely encouraging. We broke through this level of resistance. I was a little bit worried about that, but I had so many factors on our side. And even on the weekly, we've broken through. This could be a real big winner. If this market continues to run, this could be a heck of a winner. And I've got two additional ETFs that I'm considering adding, but I'm also looking at a lot of individual stocks because, as you know, on individual stocks, if we have five individual stocks, we may have two or three fairly small losses, but when we get one or two runners, they really make an impact on a portfolio. And so I've got two more ETFs that I'm considering purchasing, and I've got a heck of a lot more stocks that are on my radar that I think could make a real impact in our returns. So that's a story. If you have any questions, you know what to do. Call me, email me, hop on my calendar is awesome. We can look at your account together at any time. And I want to make sure you're comfortable. It's been a heck of a ride since Mr. Trump was reelected. It's been volatility that has been mind-numbing. I know, and that can be very uncomfortable. Right now, it looks good, but I just gotta warn you, we still have the same man in the White House, and good can turn to bad in one tweet. So just be prepared for that emotionally, because that's just the world we're in right now, and we are going to be in this world for quite a bit of time. So hang with that. But during that time, especially if you have questions, reach out to me so we can talk. Okay, have a wonderful weekend, and we will get back at this early Monday morning. Talk to you soon. Bye bye.